Joanne, how should I be reading these numbers? The headline number looks strong, but we've got a dip in the one-year inflation data.
So the dip in the one-year inflation data is actually a good sign. It is telling us that consumers are feeling like inflation is waning a little bit. Part of it is due to gas prices coming down. And indeed, consumers believe that gas prices are not really going to change in the year ahead, but that is something that could change quite quickly as global factors evolve. At the same time, consumers are, their concerns over inflation are easing on in a number of contexts, in buying conditions for durables, cars, homes, as well as their concerns over food prices. So this is not just about gas prices here.
Joanne, how does this all play out as inflation cools potentially, but interest rates remain so high? At the end of the day, borrowing costs are going to impact consumers. So does the picture we're seeing today get more complicated?
It remains complicated. I wouldn't say it gets more complicated, but indeed, consumers, their sentiment, even though it rose from last month, it's still below where it was 2 months ago. And consumers are still telling us, in spite of their concerns over inflation waning a little bit, the sentiment is still very much weighed down by inflation. Their concerns over high borrowing costs are continuing to rise, and they still feel a lot of strain on their pocketbooks as a result.
If the Federal Reserve is looking at this data right now, are these numbers telling the Federal Reserve that they need to do more or less?
I don't think it tells the Federal Reserve it needs to do more, but I don't think there's a lot to say. As you could see, long-term inflation expectations have remained the same. So that hasn't yet come down. I think that consumers are, even though they've had very strong readings for spending, both in goods and terms of services as well. But still, consumers are they're running down their savings. Their consumer credit and credit balances are going up a lot. This current pace of spending really is not going to be sustainable in the long term.
Another interesting thing about the numbers that have been coming out, too, is the disparity you're seeing between political parties, Joanne. Democrats seem to be more excited, for example, than the Republican consumer is. What's behind that?
The differences in sentiment by political party identification is something that we've been seeing in the data for the last several years. So that's not really anything new. One of the things to point out is that even though we have this partisan split in overall sentiment remains low for both parties, as well as independents overall. For this easing in inflation expectations, that's something that we are seeing across all the political groups. All the political groups are seeing some easing in inflation.
What kind of numbers would we expect in a recession? I'm wondering what happens. Do we see expectations bottom out? Do we see current conditions bottom out before the recession, or do they bottom out during a recession, Joanne, normally?
Usually it bottoms out. Expectations have been a leading indicator of economic downturns. So that's what we would see bottoming out and remaining low prior to a recession. We're kind of in an interesting situation right now where consumer spending is remaining really high in spite of this very low sentiment. But consumer spending doesn't always come down all that much during a recession. So it really depends. One of the things to note is the very tight labor market. Consumers are reporting very strong incomes. So, even though their sentiment is very low, they still have these strong incomes supporting their consumer spending. But we are seeing some signs of weakness there. Consumer expectations over unemployment rates have deteriorated over the past year. So they are expecting unemployment to go up in the year ahead.
Well, the other commentary also surrounds around gas prices. And I'm wondering, Joanne, how much the gas prices are making consumers very sensitive to what they're seeing in the broader market here, or are there other factors also that are quite volatile here that could really start to change the trajectory we've seen in this print?
That's a great question. So gas prices are something that consumers are very sensitive to, particularly for their short-run inflation expectations. They're a little bit less sensitive to it in terms of month-to-month changes in sentiment. As an example, gas prices have declined, continuously over the last several months, and in spite of that, sentiment has been going up and down during that period. So sentiment does not move in lockstep with gas prices. And one example of other factors indicators is for wealthy families, for high income families, their stock markets will affect their sentiment as well. High income families actually have just about the same level of sentiment right now as low-income families, even though in the past they generally have higher levels of sentiment. And one reason for that is stock market turbulence. But overall, it's not just gas prices. It's the price of all the goods that they face, including food and other goods and services, as well as their incomes.